Good evening. I'm Epstein, and here we are with your SPDR-ETF stock market wrap-up. And this wrap-up is for the evening of Tuesday, the 20th of February, 2024. Now, wild day, basically a down day if you really look at the markets. A lot of earnings reports today, a lot of changes going on in the Dow Jones Industrial and Transport. So maybe we talk about that for a minute and bring you up to date with what's going on. You get tomorrow the mortgage market survey, the Johnson retail sales, Johnson book, the Federal Reserve minutes. That's going to be important at 1 o'clock. The API energy stocks at 3:30. And then we have a number of Fed members scheduled to speak starting at 7 in the morning till noon. And you can see that's going to be Bostic, Barkin, and Bauman. Then Nvidia earnings. That's going to be the big event of the day. That comes out after the market close. The 37 analysts that I watch, and that's Bloomberg surveys, Reuters, other ones out there, about $4.59 a share. Discover Card announced that they finally did announce that they're being bought by Capital One. It's going to face hurdles. You already saw Elizabeth Warren come out going, no, they're not. That's got to be stopped by the by Congress and so on. You're taking out a big player. You get too much consolidation, too much power in one hand. It's going to be a hurdle. I don't know if it'll go through or not, but it won't be easy. We saw Palo Alto Networks. This is one of the big tech companies for security. They did a miss. By the market standard, down 20% in the market. So, Toll Brothers came up. It's a beat. Walmart was a beat. Then we saw that Amazon is now replacing Walgreens in the Dow Jones Industrial Averages. And we are seeing that Uber is knocked out JetBlue in the transportation, the Dow Jones. I think that comes in right at the end of February. You'll have to check with your broker to find out about that. But those are big changes. You don't get that very often. So here we go. But my thing is tomorrow is going to be about one thing, and that's going to be about Nvidia. Does it hit perfection? Does it come out and the numbers are so strong it takes off in the aftermarket and just goes crazy, and then we walk into some event on, if you will, Thursday morning? Could it hit the numbers and the market drops? Right now, option strategies are projecting, that's all I can tell you, an 11% move up or down in the stock. That's huge. I mean, today you're at 694. So that's going to be the potential, doesn't mean it'll happen, of $70 or $80 in a move. Anything can happen. You know, what if you go 20%? Then you're 120 lower in that market. What if you go up 20%? It could be, as I said, anything. Amazon down today, and on the weekly charts hit an interesting support zone. Netflix back down $8 today. ARK, they announced that over the past couple of days, they've sold out a massive amount of Coinbase shares. So I found that interesting in the market too. So why don't we take a look, if we could, at where the culprit's going to be tomorrow. And this is your Nvidia stock, all right? This is your daily bar chart. I did the weekly over the weekend. You can see how the market is slipping back. I'm hoping that if you wanted to take some money off the table, you did. If you decide you're just going to ride this forever, I hope it goes your way. So I hope both ways. It doesn't matter to me. But you've got higher highs, lower lows on the stock. The first resting spot, in theory, should be when a market goes up and gets a good correction. I look for the markets to return often to the 18-day moving average of closes. That's the red line right here. So that's my first objective. If the market has a completely crazy day tomorrow, who says you can't drop down to the lower Bollinger Band in the 590 level, about $100 a share lower? Is it possible? Of course it's possible. Do I know if it'll happen? I don't have the slightest idea. Do I think tomorrow's going to be dangerous and wild? Because as goes Nvidia, the darling, if you will, of this chipset part of the market, so go the other people that service them, the software that goes along with it, and so on. So if you think tomorrow just going to be one of those earnings points after the close and Nothing's really going to happen. You might be right. Listen, I don't know. Do I expect that? No. Do I expect a lot of volatility? Yes. When the dust settles, do I think Nvidia, anything changed about the company, whether it does better or worse? No. But at some point, there will be a number in Nvidia, the darling of the market, where it's too high. I don't know what that number is. I don't claim to know it. But I've seen this. I've been through these things before. But it could have a heck of a way to go before you reach that. I don't know. I don't claim to know. I know you're early in AI, and that to me is the importance of what is going on there. When we take a look at the momentum, I'm a chartist, so throw the name off the chart. You lost the bullish embedded reading. The goal is back to the 18-day average, or the closest main moving average. Happens to be that one, so that's what I was looking for there. Now I come to lift. All right, you were over the upper Bollinger Band too many days. You generally don't go more than 5. You had 3 over, so today you're pulling back. The big support in this market is all the way back in the sideways action here, and certainly the 1376 area is a number that glares at me. It would be interesting. Do I have what I call a trend? No, I had a vertical price rise. Why? A lower low, you shoot up dramatically. Where do you even put a stop on something like that? I mean, it just goes. And, you know, for many of you that try to catch these plays, there's a strategy. Okay, buy a put and buy a call. Eventually, one of them is going to blow up, okay, or blow down. And that's one of the ways. So you get strangles and straddles. That's what they're called. Understand what they are. I am not by nature an options trader, okay? I have tried it in my life. I have watched owning brokerage firms, how traders try to do it in it, and I would say most were not successful. And because of that, I walk away. I think it's a good insurance policy. I think they have a certain place for sure. If you were long this and you wanted to write calls and lock in some money, that makes sense. But as for the gambling, if you will, aspect of it, I've never been a fan of it. Have not been successful at it. Don't mind sharing that with you. And I'm sure there are people that are very good at it. I'm just not one of those people. I find it easier to do what I'm doing and try to catch the market action that way. But in lift, you're overbought, over the band. I'm waiting for a trend to develop. Higher lows, higher highs. I can see where the support could come in, but that's about all I can say about it. On UGA, not surprised. I told you when we were up here that I thought we were getting a bit expensive. We can pull back, but now you're into the big support. Again, just like we showed you in the video, down to the first support, the 18-day average of closes in red. This is where the market now starts to decide what is the next event that's going to take place. In XLF, the financial services, an overbought market that if we take a look at it on Friday, it hit the upper Bollinger Band. The first time you hit that, if you've taken my enhanced Bollinger Band course, you understand you back away. And by the way, that brings me up to this before I go on with the rest of the charts. I do want to remind you that we're going to have our live webinar, and that's this Thursday. I will open up the doorway to it. It's a Zoom webinar at 12:15 p.m. I will start talking at 12:30. I always say hello and I welcome people and do voice checks and everything from the 12:15, 12:30 time frame. It is fast-paced. A lot of you have written me questions. I will be setting up those charts as best as I can tomorrow. I've gotten a lot of questions that are concept questions. Do I do this? Do I do that? What do I think of this strategy? I will do my best to give you answers on those as well. And away we go. So you can either call my staff if you can't figure out how you get in. You have to have an invite from us, or you can come up in the video, click up there, you'll see an icon, give it a click, fill out the form. You will get your user ID and your password with the link to come in. And from there, by the way, in that form, there's a question area. If you want to write me, questions come right to me, and that's how I set up everything. So tomorrow's my day of setting that all up, okay? I hope to see you there. All right, so let's come back here. So in XLF, as I said, you got up, you're pulling back, supports back at the 18-day average, you're overbought. Nah, I don't see anything that I like right there. In XLI, okay, now this market, it has not lost its bullish embedded reading. If it does, you got to come out of longs. So this pullback is the interesting pullback. Now, when you reopen in the morning, if you're flirting with losing, the numbers under 80, a lot of traders are going to have to make decisions. See, when you get a number under 80, 79, and let's assume you close there, not just getting intraday, you could be going back to the 18-day average, which is $2 lower. That's a big move from right here. On the other hand, if the market's strong, do you want to go through Nvidia? All right. I am not saying that this has to be affected by it, but generally, when you get one big stock and it can move everything, there's emotion that just runs in with the market. It sort of goes bonkers on you. So always be careful. AMC, I keep hearing the talk about Dune going to be the blockbuster for the sci-fi people this year. So I'm looking on the pullbacks. Where could this market find support? I'm still thinking it's in the 430 area. Originally, I thought it was $4, but I'd like for the market to get away from being overbought, either embed or correct that. In the consumer discretionary, I don't like anything I'm seeing right here. I have lower highs, lower lows. The bias is up since the market's over the 18-week average, but momentum is pointing down. This is a difficult chart right here. And when I see that difficulty, why make your life difficult? You back away. Then we come to the home builders. Now, Toll Brothers did great. The average home price was about $1 million. They've got a big backlog. They're getting so much business that they said in their conference that they are thinking of doing away with the idea that they help you buy down your mortgage rate so it gets lower. Remember, mortgage rates have shot up. They're over 7%, 7.25% in some instances. So that changed. And with the spring market coming on, they're seeing definite people coming into their places, wanting to get homes. Their books are filling up for what they're going to do. And I told you, when you come to the custom home, especially from Toll Brothers, which are the higher end custom homes, the people either have the cash, they have the wherewithal to take care of it, whether the mortgage is this number or that. But it's interesting. It's only February, and they're considering doing away with any of the perks to get you to buy the house. I found that fascinating. Just shows you how strong the market is. And people saying that home values are going to fall, I don't see that. And how they're getting to the $1 million home, they're slightly smaller. Okay, remember that. That's what people are doing now. The old days of the McMansion seem to be over, even though people have made fortunes in the stock market over the past 2 years. In XLE, the energy, now I'd be very careful here. You're at your upper band. So where do people go if the tech sector gets hit because Nvidia doesn't perform? Could it be energy? I don't know. Could it be industry? I don't know. The money's going to look to go somewhere. I also read something this morning that I wrote about. I think I wrote about it. Not even sure. I know I read it. How much more money has gone into cash than we were led to believe. A lot of people have been on this rally taking money out of the market. They're either going into cash or they're going into bonds and notes. And they're saying, for the moment, I'm happy with 4 or 5% return. This market's gotten ahead of itself. Analysts were calling for maybe 52 to 5,400 in the market, and we're within what, 8% of what they were talking for the whole year. That doesn't mean you can't go through those numbers, but I'm just giving you the thinking. So you're starting to get people to think that. Then they're looking at what the Fed is doing, and the Fed may not even have to cut interest rates. I mean, finally, I'm hearing people talk about it. I have been there, as you know. I have been the holdout against so many people. I said, this is a data-based Fed. Now, eventually the Fed has to use its visionary tactic with the data, but we're not there yet. So right now, I know people are saying, oh, you're going to see it's going to be a May cut or a June cut. Well, show me the data that says that, and I want to buy into it just like everybody else, but I'm not seeing the data. You got to at least get jobless claims to rise. You got to get a jobs report that looks weak so that then everybody goes, uh-oh, there it is. We're starting to see the problem show up, and then you'll get the next month, the April. You understand what I'm saying, leading up to when that can happen or not happen. But you haven't had those events. You've had a strong PPI and a strong CPI. So as much as you'd like to listen to the guys that think they know what they're talking about, they don't. The Fed's the only one that knows what they're talking about. And the Fed has said they're not doing anything till the data says to. Now, that doesn't mean they'll wait for the bottom to cave in. It means that they have to try at some point to skirt that from happening, but they need to see the data weaken. They haven't had that yet. When they see it, we'll hear about it. And by the way, tomorrow we get the FOMC notes. So at 1 o'clock, so be ready for those. Everybody's going to be looking at those very hard. So let's go to the next chart, GLD. I wrote in my full research report today, and you know I do put out twice daily market research reports written. They are short by design. They are meant to give you the points that I think are important, both technically and things that you start looking at. And I wrote this morning, I said, I think you're going to go to 439, and that's where the market's going to have to decide what it does in the futures. Well, here you are in the gold. What was number? It was 2039. That was it, not 439, 2039. I got 4 in my mind from something else on the cash futures, and bingo. And you're here at that. You could get bullish here. A lot depends tomorrow on how markets go. I saw some buying today, expected some buying in the gold market as protection. You heard me. Probably VIX protection as protection into Nvidia tomorrow. In the silver market, nah. The first challenge of an upper Bollinger Band and a 200-day average, even the 100, all in one day, you buy that. I'm sure you want to. I would tell traders, no. I think this is where money comes off the table, not going in. And in the copper market, you know, since China has gone on the lunar holiday and come back, they've had a nice rally in their stock market. But as I told you, it's smoke and mirrors. Don't buy into it. All right? They still, to the best of my knowledge, I could be wrong, aren't allowing short selling. The large brokerage firms have to clear big orders on sell orders, as I understand it still. I haven't seen anything that says that they've removed that. They cut by a big amount for them their 5-year prime rate loan rate today by 0.25%. That's big for them. And that is the one that is tied there to mortgage rates. So that's what they're trying to do is support their market there for that. We'll see if it works. So far, not a lot has worked for them. BND and TLT, still in a bear camp here, still embedded. Lose the embedded reading, I get interested in covering shorts if I were you. But would I be down here being a buyer? Why? You're still in a big bear trend as I see it. Then we come to the dollar. And the dollar failed right where I teach you here. The upper Bollinger Band failed at the band. You get your pullbacks. And momentum is turning down, and you're right into the main support of the market. Now, this is where the dollar has to decide what is next. It's a close under 27.96 will be bearish. Then you'd have lower highs, lower lows under that, and you open the door up for the lower band. Holding here and basing for a little bit could turn out to be bullish one more time. FXE, higher lows, higher highs. It got itself a bull bid, so the two flip-flopped on each other. We'll talk about this and a lot more on Thursday in the webinar. Remember tomorrow, Nvidia after the close, FOMC meetings, lots of earnings still coming out, lots of surprises as we're seeing. And I warn you, some of this stuff is priced for perfection. You don't get perfection, you're seeing reactions kick in. I'm Ira. You have a good evening.